Welcome back to another episode of Divorce at Altitude. I am Ryan Kalamaya. We took a little holiday break, but we are back recording. And this week we are talking about spousal support or maintenance, alimony, whatever you want to call it. We're talking about that concept. And we are joined by Robin Beattie. Robin is a partner in the Lakewood firm of Polidori, Franklin, Monahan, and Beattie. She served as the chair for the family law section of the Colorado Bar Association in 2018 and 2019. We talk about her experience in that role because she was involved in changing the maintenance statute, and we talk a lot about that. But Robin is the co-chair of the Amicus Committee of the family law section and serves on the board of directors for court support in Jeffco. She's listed as one of the best lawyers in America and super lawyers. She was the president of the first Judicial District Bar Association in 2013 and 2014. She carries a superb rating of 10 out of 10 by the online lawyer directory of Avvo. She graduated from the University of Michigan with honors in 1993, and then she worked for a family law firm as a paralegal before going to the University of Colorado at law school. And she talks about how she went to CU, and it relates to the Columbine massacre, or Columbine High School massacre. But she graduated from CU Law School with the highest honors in 2002. She is well known as an expert in spousal support. And before I go on much longer, so Robin, you went to the University of Michigan.
I did.
Are you a big Wolverines fan?
I was when I was there, but since then I'm a Broncos fan.
Got it. Well, unfortunate losses for both teams last week, but can you tell us, how did you end up at the University of Colorado for law school?
Well, I'd been living in Colorado for quite a while before I went to law school. It is not my first career. Law is the second or third career, really.
And you started off with being a paralegal, right?
I was a paralegal, and I also worked for the Commerce City Police Department as a victim advocate. So when I went to law school, I actually was planning to go to school to be a social worker, specializing in crisis counseling. That was the plan.
And you eventually made it into family law. So tell us a little bit about that transition from being a victim advocate and ultimately ending up being a divorce lawyer.
Well, when I was making my decision, trying to figure out whether to go to law school or social work school, it actually coincided with the Columbine tragedy. And I was a first responder to that. And it was definitely the worst experience I've ever had. I hope it's always the worst experience I've ever had, because it's a day I'll never forget. And after that, I just kept waking up in the morning crying. And I went on another call afterwards, another call to a victim site. And it was not a tragedy, really. I mean, it was, but it wasn't. In the scope of tragedies, it was low on the scale. And I just had a really hard time empathizing with the person. Her cat had been killed, and what she wanted was for the dog who killed her cat to then be killed. And I was trying to say, that's not necessarily what we should be doing. Are you really sure that's what you want to do? But part of me just was disconnected with it. And I realized that was probably not going to work. So I ended up calling the University of Colorado and saying, I know I said I didn't want to come to school, but now I do. And when I told them the circumstances, they said, well, yes, you can be a student. And so I started law school when I was 30.
And then tell us about, so you said you were intending to be a social worker. It's funny. My dad was a lawyer and he went to CU Law School, and I went to law school knowing that I wanted to be a trial lawyer. But I thought the last thing would be living in Aspen and doing divorce work. And so, but kind of careers take their twists and turns. And so tell me a little bit about how you ended up coming to family law as your primary practice area.
Well, I started at a firm called Featherstone DeSisto, which is a corporate law firm, boutique, really neat firm. I liked it. It was a trial firm. And you don't ever go to trial when you're a trial lawyer with a corporate firm. And so, I didn't see the inside of a courthouse. When I was a paralegal working for a family lawyer here in Denver, he saw the inside of a courtroom all the time. So like you, I wanted to be a trial lawyer, wasn't going to trial. I also missed that connection with people, because when you're a civil lawyer, people's insurance companies are covering things. And so they're not really intimately connected with the outcome of their cases. It matters, but it doesn't matter. So by doing divorce law, we're dealing with the most important things in people's lives, their children, their money, their families. We deal with the ultimate issues.
Absolutely. And I think that for people, I'm sure you get asked all the time, why do you do what you do? Or how can you do what you do? We hear that all the time, because we do get to deal with the kind of heavy stuff, the parenting and the money. And it oftentimes feels like the world is ending for our clients.
That is true. And, on some levels, I think that having worked in a field where life really was ending literally for people, I can help kind of ratchet some of those things down. For instance, if somebody's really coming unglued over a financial issue, you can let them know, yes, this is extremely serious. I'm not minimizing it, but there are worse things that could be happening to you right now. And that's more true with staff and other attorneys in my office. We can put it in perspective pretty easily.
Right. Well, you're here today. We're going to talk about maintenance. You're one of the maintenance gurus for Colorado. We're going to get into that. So before we begin, I think that it would be helpful for us to define what spousal maintenance or alimony, because at least for me, I use those interchangeably. So if someone walks into your office, Robin, or does, we're in virtual kind of land at this point, and they say, I just don't want to pay maintenance. How do you explain to that person what maintenance is and how the courts consider it, just in a broad strokes?
Well, maintenance now is very heavily regulated by the legislature. The legislature has changed that statute several times since 2014 and really stipulated what they want us to be looking at, and the fact that they do want people to be paying and receiving maintenance. They want the payee's lifestyle to continue, and I expect part of that is that they want the lifestyle to continue without the state having to step in to help. They want that ex-spouse to step in to help. So, what I explain to a person who's coming in is, I've never met anybody who really wants to pay maintenance, but unfortunately, it is part of what we all agree to when we get married, unless we have a prenuptial agreement that makes it so that maintenance won't necessarily have to be paid. It's just part of getting a divorce, unfortunately, or fortunately, depending on who you're representing.
Well, and you referenced those statutory changes, and one of them was the guidelines. Some people refer to them as formulas, but then there was also a significant change with the taxability. So, can you talk? You were involved in that, and that's one of the reasons that we wanted you to come on and talk and give kind of a pull back the curtain and really have the Wizard of Oz kind of speak to what happened in the changes with the taxability of maintenance, and how does the legislature, what's that process like? So can you give our listeners an idea of what you did and how that machine, machine works behind the curtain, so to speak?
Sure, I definitely can. So, I think the first thing that we just need to talk about is that there was a formula that was put into the statute. I believe it was in 2014. Before that, there was no formula. The courts considered what does this person need? Does this person need maintenance at all? There was something called a threshold test that people had to meet before maintenance was even discussed. And it was very much a consideration of the totality of the circumstances. Mm-hmm. The formula was enacted in 2014. And in essence, what the formula provided was that the court would take 40% of the higher of the total income, okay, and then subtract the income that was earned by the lower earner. So in other words, if the total income was $100,000 and the lower earner was earning $20,000, they would subtract that. Okay, so that the lower earner would have a total of $40,000, which would include that $20,000. So in that scenario, the higher earner would pay $20,000 to make it a $40,000 a year salary for the lower earner and a $60,000 a year salary for the higher earner. The formula was predicated on the concept that existed for as long as you and I have been practicing law, and really as long as even the people who founded my firm have been practicing law. So over 50 years. And that premise was that the higher earner was able to deduct maintenance. So in other words, if he or she were paying the $60,000, he was able to discuss, well, in this case, $20,000, excuse me, to stick with the same example, but if they were paying $20,000, they would deduct that right off the top of their income taxes. So that instead of showing an income of $100,000 on their tax return, they'd show an income of $80,000. And that was a great way to sell maintenance, you know, in the old days, because it wasn't as bad. But now what happened was that the Tax Cuts and Jobs Act changed the taxability of maintenance from being tax deductible to the higher earner. And now it is not tax deductible to the higher earner. So in other words, that higher earner has to pay taxes, and then any maintenance payment comes out of their net. And that's a hard issue. And so when that happened, I was the chair of the family law section for the Colorado State Bar Association. And we were obviously all just like, what are we going to do right now? Because the whole statute, the whole formula was premised on the idea that the maintenance was deductible. So the first thing we did was at the next executive council meeting, we meet once a month, we took a poll as to whether we should keep the formula at all. And I thought that the results of that poll were interesting, because when the formula was first being considered, first being discussed, people didn't really like it. But at this meeting, everyone except one person believed that the formula was helpful, believed that it helped settle cases, and believed that we should continue with a formula. So that's the first decision that we had to make. Then the next decision is, okay, well, should we then change the formula in response to this change in the tax code? And again, with the exception of one person, we all decided, yes, we're going to change the formula. Well, I believe that was probably the third Friday in January or the third Friday in February. I don't remember which one it was, but whichever one it was, there were only 6 weeks until the end of the legislative session. So it must have been February. And what happens is when you're trying to pass new legislation, you have to first decide what you want to have as your new statute, what modifications you want to make to an existing statute. And then you have to find someone, a legislator, to sponsor that. Mm-hmm. And then you have to develop the recommendations for that, for the sponsor. And then you have to argue at the legislature to get the new legislation passed. You have to have the family law section approve it. you have to have the overall Colorado Bar Association approve it. So this is typically not a process that happens in 6 weeks. This is typically a process that happens, we start in September, and then, the former head of the legislation was Miri Moses, and she would always have new bills for us. Now it's, I believe Chris Radiff is one of the chairs, and there's always new bills going, and they're just discussed at every meeting, and the changes are discussed at every meeting over the course of the year. That wasn't going to happen here. So we formed a committee, and the committee asked several local accountants to help us, and several local accountants to analyze how the impact of this would or should affect the formula. And we ended up with a chart developed by Eric Six. And that chart, I'm going to just call it the split the pain chart. Yeah. And so what he determined is that, everyone's going to suffer, right? Because by shifting this tax burden from the lower earner to the higher earner, you've reduced your net sum. Okay. Right. So everyone's going to suffer. So what the magical chart did was it decided where are the cutoff points where people will suffer equally. And, they kind of decided, and Eric decided, and then other people weighed in and agreed that the first set of adjustments needed to be made for people who earned under 10,000. And if we applied one adjustment to that group of people, it would help share the pain.
And the idea, Robin, was, and just for people that to kind of understand, my recollection, and correct me if I'm wrong, is that the deductibility of maintenance, that it was a last minute, it was kind of at the end that they pulled that because what ultimately happens, you and I both know, it was one of the last win-wins in a divorce. I used to explain to people where if, for example, we have a hypothetical divorce scenario, Eric and Melanie Wolf. If Eric is going to be paying Melanie $10,000 a month and he can deduct that, then Melanie, if she's in a lower tax bracket, she gets more after taxes because it's taxable to her. And essentially who subsidizes that difference is the US government, the IRS, because we were playing tax arbitrage. And so you and I would explain to clients, hey, we can try to get as much maintenance instead of child support, or there's really a win-win. And when you were saying that there's this lose-lose or feeling the pain, it was because that subsidy by the government was no longer available. And so at least the step-ups and the threshold issues that you guys addressed was that there's different tax consequences at different income levels. So if there is less money, then the taxes are not, the impact is not as great. Is that generally accurate?
Yes, that's generally accurate. And yes.
And so you guys then had this last minute change in the Tax and Jobs Act about maintenance and the taxability. And you're like, whoa, we gotta fix this. And I remember waiting, and because there were these rumors or rumblings and everyone was just waiting for this new formula or new way that Colorado was going to approach. And you guys did it was a rush legislation because of, we were kind of in this holding pattern.
Well, if we hadn't changed it, every payor of maintenance would have suffered greatly. So that was the rationale for making the change in such a hasty fashion. Was it perfect? No, it's not perfect still, because we've actually never amended it.
Right.
It must be good enough because we've never amended it. But I would have loved to have had more time. It's just a question of, are we going to let everybody suffer while we think about this and right. wait for a whole nother year? Or are we going to fix it now and then correct anything later if we have to?
So tell me about, so Eric comes up with these thresholds, and then did you go, what happened from there?
Well, so the committee, which was me and probably 6 or 7 other members of the family law section, executive council, and Eric and Yvonne Zuper, we all sat down and just argued and hashed it out and looked at the magic table that I briefly showed you and tried to decide whether we wanted to change the statute and how. And then we did. And I believe that it was Jeremy Ramp and Beth Henson who argued it to the legislature and actually made the changes to the statute. And they had to change the child support statute too. So it was fairly all encompassing.
Right. And for listeners that don't understand or we haven't done a long form episode on child support, but, generally speaking, maintenance, when we're talking about income in divorces for child support or maintenance in particular, because that's really where income can really matter. We're talking about gross income, so before taxes. And so child support, we are looking at income before taxes, but you got to factor in the maintenance aspect. So they're all intertwined.
It is a mathematical mess. I think that's the technical term.
Right. I like to tell clients I went to law school not to do, to avoid math. And then I ended up being a divorce lawyer where I do math all the time. And now I love it in terms of kind of crunching the numbers and figuring out what's gonna work. So so you guys made it happen. What are your thoughts in retrospect on the process and what you guys were able to accomplish?
So I am proud that we were able to do it so quickly. I think that was a boon to most Coloradans. I would probably think about just having someone go over the math again at a more leisurely pace, but I have to assume someone's done that. I haven't heard a large number of complaints. And really, when you look at Eric's chart, it does divide the pain. I mean, there was going to be pain. There's no way to change this and not have each party have less money. And I think we did do the best possible job of dividing that. Now, I think the very important thing to note is that this doesn't apply to people whose incomes are over $200,000 for a reason. And the reason is that once you get to that level, you need to be looking at the specific tax consequences, right? You need to be looking at what tax deductions does that person have. And that's a factor in the new maintenance statute, because we want people to be able to put forth arguments that I shouldn't have to pay as much in maintenance because my tax bracket is this much higher for X reason, or I don't have the mortgages to deduct or mortgage interest to deduct, or whatever that argument is. You need to look at that post-tax income. And another item that we thought about when we were working on this was who can afford to have that done, to specifically look at those numbers with a CPA and hire a CPA for their case.
Right. And I think that what you referenced when you did the straw poll, the internal poll, is going back to 2014, because I remember the concept of a formula. A lot of lawyers were adverse, or they were opposed to it because they thought, oh, it's just going to be reducing it to a formula. But your firm has like the maintenance Bible. And I've heard you talk about it, and you have every single case on this outline that's ever addressed maintenance. The reality that we all knew was that there was it was really arbitrary, or it seemed to be arbitrary, as to how judges approached maintenance. And that when you had this guideline or formula, there was some variance, but at least you had kind of an idea of what ballpark you were playing in. And I think that really helped, and people saw that the benefit of the predictability, and you could go to your client and say, well, if they apply the formula, then this is what happens. And I've seen at Family Law Institute, which I know that you organized, and I can't remember if it was the one that you organized, but I saw a panel of judges, and most of them said, I started the formula and then I worked down. So an example that you just went through is maybe a doctor. And the doctor could make a lot of money, and on that guideline, they might be above the guideline, but they might have student loan payments that cuts into that discretionary income. So, it might be a huge factor that you have to consider, but a doctor is able to pay someone like Eric Six to do a net spendable income analysis. And, we can get into the, weeds on that, but that really, I think, is what you guys were looking at in creating that kind of threshold of 240, I believe, $1,000. Anything above that. So is that? Do you have kind of any thoughts on that work, the net spendable income, or what happens above those cases, or that income level?
Well, I think that the net spendable income analysis is very valuable when you have the higher earners. Looking at how much each person pays in taxes is imperative, because someone who's paying alternative minimum tax, for example, they're paying up to 50% of their income in taxes. And so, there's no way that we shouldn't be looking at that. And I find that sometimes people don't understand that, and judges don't understand it
Right.
until you present it in black and white, and nor should they, right? I mean, when we talk later about some of the more recent cases, we're going to talk about findings. I think you have to have that evidence so that the court has a premise for those findings.
Yeah, and to that point, I mean, so when we're talking about net spendable income, what we're looking at is how much someone makes, and there it could be variable, but then there are some knowns. Taxes is certainly a known issue, but someone is entitled to, for example, health insurance, or their general livelihood of paying their mortgage, or they might have some sort of obligation, like I referenced a doctor with the student loans. And so what someone like Eric Six will do is look at the person's income and then say, well, how much money are they going to have after they have to pay these various expenses? And there's always a debate about what is included in that, but taxes or insurance or some obligation. And so then you see, after it's all said and done, how much do they have in income that they could potentially pay to the receiving the receiving spouse.
And you make a good point. I mean, certainly insurance, especially insurance used to secure maintenance, needs to be on that chart, because that can be expensive depending on how old the payor is.
Yeah, and I've seen it where a property payment and equalization payment, that can really, impact the amount of net spendable income, because if you deal with property, and we won't go into the factors, but in terms of addressing the amount of property. So, but anyways, why don't we switch gears and talk about temporary maintenance and support, because there have been a couple new cases that have come out for guidance. And I know that in terms of when you're talking about arbitrariness, there are some pretty significant differences of opinion in terms of strategy, I know, within divorce lawyers as to how they approach temporary maintenance. So can you tell our listeners, what is temporary maintenance, and I guess what are the kind of competing viewpoints on that? And then we can talk about kind of the new cases that have come out.
Sure. So with temporary maintenance, you're looking at the time between, well, I'm going to say this with the caveat that now these new cases kind of change that. But what I tell my clients, or used to tell my clients, was you're looking at the time from when you file the petition until the date of permanent orders. And so the temporary maintenance isn't even, you're going to go to temporary orders 90 days in, maybe 120 days in. So I think that if you can work things out, you shouldn't necessarily rely on that, but I think I'm going forward before actually explaining it. So what temporary maintenance would be is it's the amount of support that the higher earner is going to give to the lower earner during that temporary time frame before permanent orders. And the question I think that you're referring to is, do I go to a formal temporary orders hearing to establish a formal number, or do I insist on entering into a temporary stipulation to establish a formal number for temporary maintenance? Or do we just do what we refer to as maintaining the status quo, where the two people both put their incomes into the joint account as they have always done, and they pay their bills as they have always done out of that joint account? And there is no formal either temporary orders hearing or temporary orders agreement, because the parties are just working with the money they have out of that joint account.
Right. And I think, that the late Bill Honeycutt, who was a well-known divorce attorney, I remember I had a case with him, and in his Southern drawl, he said, Ryan, as long as bills are getting paid, I'm okay with the status quo. And that was when he represented, a party that was going to be receiving maintenance. There was no question about it. But the issue is, do you push that issue at the very beginning? Because you can have an argument about how much is that amount going to be, and you can save that argument or that fight for another day, because both parties are going to be incentivized. They know, even though it's not supposed to be used for consideration of permanent or maintenance at final orders, everyone knows that if you agree on $10,000 a month, for example, that that could be too high or too low, and both parties kind of posture up, and there's always that risk. If they just avoid that argument, then they can move forward without any sort of argument. So there's definitely these competing issues that at least you and I have to navigate. So, but why don't you referenced it earlier, there's been some new law regarding how divorce lawyers in Colorado look at temporary maintenance. So can you tell us about some of those new developments in Colorado law?
Yeah, I can. So one of the cases is called Marriage of Harold and Calishan. And I don't know, do you want me to tell you the case site or no? So it's 484 P3rd 782. It came out in 2021. And it's a case about, should a court award retroactive temporary maintenance? So, these people had, I guess, been fighting for a year already when they got to their temporary orders hearing, God forbid. And at that point, the court awarded wife $12,000 per month in temporary maintenance retroactive to the date of filing. So that's $144,000 in retroactive maintenance. And what was, I thought, unusual about the case is that the parties were actually living together after the petition was filed. The husband was paying the mortgage, he was paying the utilities, he was paying the shared expenses, and the wife still got retroactive temporary maintenance. So I don't know if you want me to opine on that, but the upshot of the case was that, that one of the holdings was really concerning findings, and the findings that the court has to make for the maintenance, because many of the recent cases have just harped on the fact that there are specific findings courts need to make in different situations. So the court needs to make one set of findings for temporary maintenance, one set of findings for permanent maintenance, another set of findings for modification of maintenance. And when the parties fail to present evidence about findings, then the case is remanded, which really is somewhat tragic for the parties, right? Because you've already gone through your divorce, and this was obviously a very long one if temporary orders were a year out.
Right.
And then you've gone through, permanent orders, and then you've gone up to the Court of Appeals, which generally takes about a year or more to get a ruling. And then it's going to be remanded to the district court. So this is really, These are the divorces that never end. And I think that's something that practitioners for sure need to be focused on, is what are the findings that need to be made. In my opinion, that statute is so repetitive. You have to make the same findings over and over. I mean, that's a change I would make if I had the druthers or the choices to be to the legislature for a day.
Right. I think it's interesting when you look at the findings that are needed to value a business. It's like $50 million. There's not necessarily, it's just like, I believe this expert or I believe this party, and then I think the value is X. Whereas in maintenance, it could be $1,000 a month, which compared to a $50,000 business is, a drop in the bucket. But the amount of work that the judge has to do to award $1,000 of maintenance is pretty significant. The interesting thing, at least from my perspective on the Herald case, was that it did seem like the court punished the husband for not paying. He was the payor, because they live this really lavish lifestyle, and then kind of the written opinion makes it a point about the wife was kind of destitute or appeared to be destitute. But the significance, and for listeners that don't know, under 1410-115, the statute on child support the obligation does not start accruing until the later of when someone moves out or the petition. So that moving out, that physical separation, is pretty significant, because the idea is that we're paying expenses and that there's really no need for support. But in the Herald case, they said, you're living under the same roof, and even then we're going to award you retroactive maintenance. I think that that's at least what was so kind of noteworthy from my perspective on that case.
Well, and then if you're awarded 100, okay, so let's just say I'm awarded $144,000 in temporary maintenance, and we're still not divorced. Is that property now? What happens with that? I mean, if I take it and put it in the bank, don't I then have to divide it, or do I have to spend it all? And then have I just really gone above and beyond my reasonable and necessary expenditures because I just spent $144,000 in 6 months? I mean, it doesn't make a great deal of sense to me, particularly for temporary maintenance.
Right. Well, let's talk about the other case that was eye-opening or raised some eyebrows. So tell us about intermarriages of Stropman.
Well, so that one is just from December of 2021. So less than a month old, actually, or right about a month old. And in that one, the parties actually filed a temporary orders agreement where they agreed this is going to be the temporary maintenance. It started in July 2019, went through their permanent orders. And then at permanent orders, the court awarded maintenance from before the date that the petition was filed to the date that temporary maintenance began. So again, I don't know how you show that that was needed if the time has already passed. That, again, it does not make sense to me, but nobody asked my opinion. I'm not actually on the Court of Appeals. So, but in any event, what they looked at was they looked at the changes to the statute. So as you and I discussed earlier in this conversation, in 2014, the statute was modified very strenuously. And before that, the maintenance statute was the same as the child support statute. It said, well, maintenance is going to start on the later of the following. Number one, somebody moves out. Number two, somebody files the petition. And number three, somebody gets served. So whatever the latest one of those is when maintenance was going to start, just like it says in the child support statute now. Well, in this case, in the Stropman case, what the Court of Appeals looked at was, well, you took that language out and you said that the court is just going to determine the term for payment of temporary maintenance. And by taking out the specific language, you must have meant to open the floodgates and be able to award whatever you think is fair. So, but again, they made that finding regarding temporary maintenance. But with regard to permanent maintenance, they once again remanded the case because the Court of Appeals said that the trial court did not make sufficient findings. And so in this case, it said, well, you didn't make findings on those federal tax implications of maintenance. That's what you and I were talking about a few minutes ago.
Right.
You didn't make findings on the advisory term of the maintenance or the advisory guideline amount. So, it remanded the permanent maintenance award. So
Yeah, the difference between the child support statute and the maintenance statute, there's just nuances where, for example, underemployment, which hopefully we can have you come back on and we, before recording the show, we're talking about the various issues and that we can talk about, and at some point we'll talk about underemployment. But the difference between child support in viewing what the age of a child for underemployment versus maintenance, they look at income and they used to be the same, but now it's always fascinating when you get into the legislative language that is used and how critical it is. I mean, that's what we as lawyers do. And I do think that there is probably an overhaul that is needed to make those a little bit more consistent between each other, and really look at it holistically. Because there are these various issues, deduction of depreciation or not, and those various issues that you and I could geek out on all day long. It's something that I think is worth mentioning when you are dealing with those issues in a divorce.
I agree with you. And I mean, if you are interested in changing the statute, I would encourage anyone who's interested to really write down what changes they think should be seen and, submit them, because changes do happen and that's how they happen. The squeaky wheel gets the grease.
Indeed. Well, Robin, thank you for your time. Can you tell people, for people that are dealing with maintenance, whether it be temporary maintenance or anything permanent maintenance, where can they find you? And can you tell us a little bit about what the best way to find you is?
Oh, well, I'm at Polidori, Franklin, Monahan and Beattie. So just Googling my firm or my name, Robin Beattie, would be the easiest way to find me. We're actually in the midst of an exciting move. So we'll be moving from our current location to a location 2 miles away that's just gorgeous. And we're so excited, but I should still be very, very findable.
And are you guys remaining in Lakewood?
We will remain in Lakewood, yes.
And I know that you guys handle a lot of different kinds of family law cases, but your firm specializes in family law, and that is what you exclusively handle, including maintenance cases. But Robin, always a pleasure. Thank you for joining us, and hopefully we can chat more on a future episode of Divorce at Altitude.
Well, thank you for having me. I really, really appreciate it, Ryan.
Indeed.